What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Nvidia, Apple, AMD, Tesla, and Amazon. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly where to enter, where to take profits, and where to cut losses if you have to. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that SPY's sell-off intensified last week after it broke below the 50-day moving average. Now, this 50-day moving average is a level that we have not broken below since we moved above it in March of 2023. So moving below it is a very substantial thing. In fact, institutional buyers utilize the 50-day moving average to measure whether the market is leaning bullish or bearish. So you can see that after we moved below it, selling pressure intensified and it quickly took us down to fill towards 435. Now here are some levels that we're going to be watching for the week ahead, but before we get into those levels, we have to address some of the things that happened last week and some of the things that are happening this week that can potentially influence where the market goes next. First of all, last week's biggest events were the big box retailers like Target, Walmart, Home Depot, and TJ Maxx. All those retailers reported their quarterly earnings, and there was one common trend amongst all of them, and is that consumers are being more selective than ever when it comes to their purchases. Walmart stood out because they raised outlook, but all the other ones actually lowered their outlook because customers are looking for bargains and they're looking for cheaper groceries. So this means that consumers are in a crunch, and it reflects perfectly in retail. If you saw our video from last week, we told you that retailers are on the front line. So how they're doing is going to give us a great insight to how consumers are feeling. So consumers spent less on home goods, apparel, and do-it-yourself projects and started buying more groceries. They stopped buying food from outside as much, so they're not consuming as much fast food. They're looking to save money. So that means our economy is in a crunch. This week, we are going to be getting some answers to what could potentially happen next. The Jackson Hole Economic Symposium is an annual meeting, and this meeting happens with the world's largest bankers. These people are the people that set policy, monetary policy, and most importantly, Jerome Powell will be speaking on Thursday and Friday, and that's going to influence how the market reacts. But just before that happens, we have one of the biggest events of the week, which is going to be Nvidia's earnings. So let's talk about what happened to Nvidia last earnings. Nvidia last earnings jumped from 300 to 400 and continued rallying towards 480. A phenomenal jump, and it rallied as much as 60% after the report. But you can see that with the market uncertainty over the last couple weeks, even Nvidia, one of the strongest stocks on the market, gave up from its highs and it pulled back. It didn't pull back as severely as other stocks did. However, it did pull back, and these earnings are going to determine what the next 3 months are going to look like for them. Obviously, artificial intelligence has been one of the biggest fuelers of the rally that we've seen all year long, and Nvidia has been the backbone of that rally. So if Nvidia does not come in line and it's not able to impress investors as much as it did on its previous quarter, then it could set up for a potential sell-off, and all other artificial intelligence stocks will follow. So Wednesday, we have Nvidia's earnings. Thursday and Friday, we have the symposium, and we're going to be hearing from the world's biggest economists and bankers. So very, very heavy set of events coming for the week ahead, and we're going to give you some levels now. That way you know what to trade, how to trade it, and where the key levels that you need to watch are at. So let's go ahead and get started by first talking about SPY. So we're going to revert back to the daily candles, and before we jump into these levels here, let's talk about SPY on the weekly candle to see what's happening on an even further picture. So on the weekly candle, we can see that SPY is still very much trading above its key levels, but broke below its 10-day moving average last week. So if you're looking at trades this week, make sure you're zooming out. If SPY is getting to 430, just keep in mind that 20-day moving average on the weekly chart is going to be very significant, because The longer the time frame that you're looking at, the more significant support and resistance points become. So the fact that we broke below the 10-day on the weekly is more significant than us breaking below the 10-day on the daily, for example. Now let's jump into the shorter term time frame, which is the hourly chart here, and talk about some price point levels. First of all, last week on the sell-off, the SPY and other stocks, mostly tech stocks, did move themselves into oversold territory, which is why on Friday we gapped down and then we rallied all day. Now, despite the fact that we rallied all day, it does not mean that we are back in a bullish trend at all. In fact, we are still very much in a bearish trend on the short-term charts. And below 437.50, we're going to remain in that bearish trend. The next critical support that we have is going to be 431.20, which was this reversal that we saw back here. If we break below this point, then we are going to have a free fall down to 425 to 426. So just keep that in mind. Just because the market is oversold on the short term, it does not mean that it will stop selling off. Just keep that in mind when you're trading. For a bullish reversal, buyers are going to need to move SPY back above 444.30. The reason why this is the bullish reversal point is because we can see that in this consolidation back here, we spent a lot of time before getting above 44.30. And then when we broke back below it, sellers did not wait to give up their positions, and you could see that there was an intense sell-off that followed. So all the people that bought it up here and consolidated here gave up their positions as soon as they saw that the market gave up these levels again. So we would need to restore that level to restore any kind of bullish confidence. And keep in mind that when we restore that level, we would have restored the 50-day moving average here in this case. So above 44.30 would place us back above the 50-day moving average and place us back in a relatively more healthy range. Now, looking at other stocks which are following the same kind of trend as SPY, you got to remember that SPY's movement is a product or byproduct of what's happening in the overall market. So because tech stocks are going down, SPY is following with it, and it becomes almost like a relationship between the two, and it intensifies as more tech stocks sell off. SPY is going to sell off further. If SPY sells off further, more tech stocks are going to sell off. Now, looking at Nvidia, which is going to be the earnings reporter this week, so that's coming on Wednesday, Nvidia is flirting with that 50-day moving average. You can see that it broke below it. Then there was that intense upside rally that we all saw on the 14th. Nvidia tried to maintain the 10, 20, and the 50. However, it failed below it on Friday, and then once again, they brought it back up. So what's happening here is that buyers and sellers are just unsure of what the market is going to do next with Nvidia, and that's because their earnings are coming up. With the uncertainty of earnings coming up, they need to see those numbers before they decide the fate of the next quarter for Nvidia. If you're looking at Nvidia for a trade before earnings, here are some levels to watch, and even after earnings, here are some levels to watch. First of all, you can see that there's a lot of support and resistance points on this chart, and that's because Nvidia has been moving in such a tight range, and it's been having some sporadic movements. So it's creating a lot of support and resistance points for us to watch, making it a bit of an uncomfortable trade to be in the first place. If you are bearish on Nvidia, however, you would need a break below 416.50 for a downside continuation to a price target around 403.50, and below 403.50, Nvidia can see 396. Keep in mind that 400 is a very strong psychological support, so if we lose the 400 mark on Nvidia, it could be a quick trip down below 396. If you are bullish on Nvidia, you need it to recover back above 460.50 for it to regain any kind of bullish confidence, but the true breakout is going to be above 481. That is an all-time high breakout, and if Nvidia can somehow deliver strong enough numbers on their earnings report and break above 481, we expect Nvidia to continue rallying past 500, and we also expect a lot of other artificial intelligence stocks or any company that's doing AI right now to follow its lead. So that's for Nvidia. Next stock on our watch is going to be Apple. Apple is also another contributor to why the market has been selling off so much. You got to remember, if the world's largest company is seeing a downtrend in sales, you can see that their Earnings right here were 1.88, 1.52, 1.26. So it's not moving in the right direction. If the world's largest company isn't moving in the right direction, then obviously we see real life proof that consumers are in fact starting to shop at places more like Walmart. They're looking for bargains, they're looking for cheaper groceries, and that just reflects in the crunch. And all this could be attributed to the fact that we have been battling inflation. Banks across the world raised interest rates in order to battle inflation to a 20-year high, and this is the impact that we're feeling right now. People, they don't want to use their credit to buy accessories. They don't want to use their credit to buy MacBooks. They want to buy groceries, and they're looking for bargains, which is why Walmart was able to report such amazing earnings, while Apple was unfortunately struck by weak earnings. So Apple is trading below its 10, 20, 50, and 100-day moving averages for the first time since January of 2023. Apple has been one of the backbones for the market all year long. It almost reached the 200 mark, moving above the $3 trillion mark in market value. However, the last earnings took it below that $3 trillion mark, and we can see that sellers are still very much active. Now, Apple last week broke below that 100-day moving average, so that is going to be one of the main resistance points that you're supposed to be watching if you're looking at the daily candles and you're looking at these moving averages. So if you've never seen our videos before and you're wondering what averages we use the simple moving average. We use the 10, 20, 50, 100, and 200-day moving averages. Those are the moving averages that institutional buyers and Wall Street uses. So we have them on our chart to gauge whether a stock is in a bullish or a bearish trend. Now, looking at Apple, here are some levels to focus on. First of all, we want to talk about the fact that if you are swinging any kind of company or any kind of stock, what we look for is we only swing bullish swings if the company is trading above the 10 and 20-day moving averages. If a company is not above those points, then we are focused more on the downside when it comes to swinging. Now, it doesn't mean that you can't take a bullish trade on Apple. It can very much happen if you are trading intraday options. So if you're trading within the same day period, then it's fine to take a bullish trend against the overall trend. However, generally speaking, when we're swinging, we want to be above the 10 and 20 if we are bullish, or below the 10 and 20 if we are bearish. So for Apple, on its price point levels, first of all, it needs to move above 177.50 in order for it to restore any kind of confidence. But true buyers are not going to be interested until it's above 181.50 and it breaks out to 183.50 as the second price target. And then the last price target would be around 186 to 187. Now, to the downside, if Apple continues to sell off, the support is going to be 170.30. Below that point, it has a price target around 167.50 to 168. And then the next price target is going to be around 164.25. Sorry, that was a mistake. So it's going to be around 164 to 165 if it continues selling off to the downside. And you can take a put or a short position and you can ride it out towards these second price targets. The next stock on our watch is going to be AMD. AMD moved just like Apple below its 10, 20, 50, and 100-day moving averages, making the 100-day moving average the main resistance and focus if you're looking at the daily and you're looking at the moving averages. Now, here are some levels to focus on for AMD, and you will realize once again, we have been watching AMD for weeks now, and AMD is still kind of trading in that same range that we have been looking at for a while now. AMD is now right above its $100 support, which is a psychological level. If it breaks below that level, you can see that the rally from 93 to 100 was an extremely vertical rally. And what do we say always? If you've seen our videos in the past, we always say that the more vertical the rally is, the easier it becomes to fill back down if the support is broken. So when AMD rallied here from 93 to about 103, when it pulled back, it retested 100 and continued going. But you can see that that rally was also very vertical. So this move down was very easy to fill. So it's going to be the same scenario here. If AMD moves below 100, it's going to be a very easy move towards 93 to 94. If you are bullish on the stock, not only do you need it to move above the 100-day moving average, but you also need it to move above 120.80 for any buyers to be really interested in the stock, because that's going to be the healthiest level there is. Above that level, AMD is very much possible to take on for a bullish trend or a bullish trade, and you can take it towards a price target of around 125 to 126. Now keep in mind, Nvidia and AMD, they're like sister stocks. So if Nvidia does poorly on earnings, then AMD is likely to follow suit. If Nvidia does well, then AMD is likely to jump with Nvidia. So keep that in mind when you're trading this week. Nvidia's earnings are expected on Wednesday, so a big move should be coming on Wednesday for AMD and all other semiconductor and artificial intelligence stocks. The next stock on our watch is going to be Tesla. Now, if you are a Tesla trader or investor right now, you are not very happy, and that's because Tesla has been selling off for weeks. Even though the market has bounced, and it bounced very strongly on Friday, Tesla was still not able to bounce. You can see that buyers are still not interested, and that's because Tesla once again lowered their prices, which is exactly what hurt them in their last quarter. So investors aren't happy with what's happening, but nonetheless, we do believe in Tesla, and we believe that there will be a reversal, which is why we always take it on as a position trade. So remember, what we're teaching you here is how to trade on a very short-term basis, day trades and swing trades. But don't forget that these pullbacks on the market are actually opportunities. So if you are running a long-term account and you need a place to enter, these pullbacks are golden. You have a discounted stock. You have an ability to enter a stock that's going to rebound. So don't look at these pullbacks as such negative things. Look at them as positive things if you are building a long-term portfolio. And if you are interested in building a long-term portfolio, don't forget we offer the Hyper Wealth community, and you'll have a link to that in the description, where we take on longer term positions on top of our option trades from day to day. Now, if you are bullish on Tesla, first of all, you need it to move above the 100-day moving average. But just so we see the trend here, just like I said, stocks tend to follow each other. We can see Apple is below the 100, AMD is below the 100, and Tesla is also below the 100. So you can see how the market is moving in the same trend. Anytime there is a bullish market, some stocks tend to rally, some stocks stay behind. But when it's a bearish market or a bearish short-term trend, then all stocks tend to move together, which is why we always keep SPY on watch, and we like to see what SPY is doing. If SPY is bullish, there's a good chance the rest of the market will be. Now, Tesla in specific, here are some levels to watch. First of all, you need it to move back above 234 in order for it to regain any kind of confidence. Above 234, it has an opportunity to rally towards 243 to 244 as the next price target. And finally, last but not least, the second price target would be around 252. To the downside, Tesla's next support is going to be 206.50. Just because Tesla has been selling off for days, it doesn't mean that it's due for a strong bounce. So just keep that idea in your mind. If it moves below 206.50, the next downside price target is going to be a 194 to 195. Once again, Tesla is real life proof of vertical rallies being very easy to be filled back down. You can see how vertical this rally is, and you can see how fast it got filled back down. And the rally is still very vertical. There's not much supports here. So if it does break below 206, don't get surprised if Tesla falls quickly below 194. The next stock on our watches and the final stock on our watch is going to be Amazon. Now, if you've watched our videos over the last several weeks, you know that Amazon has been a favorite of ours. In fact, that was one of the positions that we took in our position trade group, and we actually entered it around 132 and were able to exit at the gap up after earnings. So we exited fully profitable. We didn't hang on to our second price target. We noticed weakness after the earnings. We actually took profits, and it was a very successful trade for us. Now, since then, Amazon has pulled back. We were applying what is called the power earnings gap strategy here, which is the strategy in which a stock gaps up and continues to rally. We saw this strategy taking place on Meta this year. We saw it here, and we saw it here, where the company reported amazing earnings and then continued to rally. Amazon, this is the same case. You can see it's pulling back, but their earnings were phenomenal. Don't forget, earnings for Amazon came in way above expectations, and expectations were already very high. So just because they're pulling back right now, it doesn't mean that Amazon is out of the game, but we did take profits on our position temporarily until we see a little bit more development in the market. So if you're looking at Amazon, it is one of the only stocks that's still trading above its 50-day moving average. Unfortunately, the market weakness all around was not able to sustain their highs. And here are some levels to watch for Amazon. If you're looking at Amazon and you're looking for a short-term trade, first of all, you need a breakout above the 136.90 level for it to restore that bullish confidence. And where do we get that level? This is simply the point above the breakout that it saw here. So Amazon on earnings broke above this level, which is right around 136.90, but soon after it broke back below. So it's going to need to restore that level for it to move to its price target of around 141 to 142, but the true breakout is going to be at 143.63. That is the highest point that Amazon reached before pulling back after earnings, so that's going to be the true breakout. Very unlikely that it breaks above that point this week, but just have it on your chart just for your record. Now to the downside, we are still bullish on Amazon unless it moves below 126.40. If it moves below 126.40, then we have a downside price target of around 123.80 to 124, and below that point, it'll be a very sharp fall towards 119 to 120. So I hope you guys found this video helpful. Don't forget to subscribe and like, and best of luck for the week ahead.